Okay, good morning, everyone. So we are going to explain one question from cash flow statement. So first, I'm going to show you how a question looks like. So when you will find a cash flow statement, first you will see that the question give you income statement. So this is the income statement. And from here, you have to note it down, where is the net income. So you find that this is the net income, $145,000. And don't forget that this net income is accrual basis net income. Accrual basis. So this net income is calculated based on accrual basis of accounting. Okay, this net income is calculated based on accrual basis of accounting, but we are preparing cash flow statement. Okay, we are preparing cash flow statement. So we have to calculate net income. We have to calculate net income based on cash basis of accounting. So what is the summary here? The question gives us net income according to accrual basis, right? Question gives us net income according to accrual basis. We have to prepare net income based on cash basis. Based on cash basis. So this is given in the question. You can see that $145,000 is the accrual basis net income. So we should calculate. We should calculate net income according to accrual basis, right? Last class I told you that. So this is from income statement, and you are going to given a balance sheet, and this balance sheet is called the comparative balance sheet. What is the meaning of comparative balance sheet? That means you are going to compare. You are going to compare 2 years data. So this is last year data. 2021 is the last year data, and 2022 is the current year data. So we are going to compare these two. We are going to compare these two. That's why it is called comparative. That's why it is called comparative balance sheet, right? Now, because we have 3 activities: operating activities, investing activities, and financing activities, we have to differentiate. We have differentiate these accounts based on different activities. We know that accounts receivable is current asset. Accounts receivable is current asset, and I told you that this current asset is related with revenue. Current asset is related with revenue. Can you remember? Current asset is related with revenue, so it is operating. It is operating activities. Now we have inventory. Inventory also related with revenue, is operating activities. Prepaid expense is current asset. So these are the current asset. You can see that. And current assets are indirectly related with revenues account. Current assets are indirectly related with a revenue account, So it is operating activities. It is operating activities. But land is property, plant, and equipment, PPE. Okay, land is PPE, and it is investing activities. So land is property, plant, and equipment, and it is belongs to under investing activities. Last class we learned this, right? Building is property, plant, and equipment related with investing activities. Then equipment, property, plant, and equipment related with investing activities. Clear? So we find current asset and the property, plant, and equipment. So we have current liability. So this is current liability. Accounts payable is current liability. Accounts payable is current liability, and revenue is indirectly related. Liability is indirectly related to the expense. Okay, liability is indirectly related to the expense, and it is operating activities. Income tax payable also current liabilities. Okay. Income tax payable also current liabilities, indirectly related to the expense, and it is operating. What about bonds payable? Bonds payable is not current liability. Bonds payable is long-term liability. Bonds payable is long-term liability, and it is related with financing activities. Related with financing activities. Then common stock. Common stock is equity account, and it is related with financing. And retained earnings. Retained earnings also related with equity and the financing. So from here we figure out who are the current asset, who are the property, plant, and equipment, who are the current liability, who are the long-term liability, who are the equity, and where should we transfer them, right? Where should we transfer them? Because we have to separate. Look at the format of the solution. According to the solution format, we should record operating activities under here, right? We have to record investing activities under here and financing activities under here. So three different sections. So from the question paper, you should also figure out who are the operating, who are the investing, who are the financing. And we have already income statement. And how to prepare this income statement? Revenue minus expense. We prepare income statement based on revenue and deduct expense. We get net income. We get net income or net loss. So this is the net income given by the question, and it is accrual basis of the net income. But as we are talking about cash flow, everything should be cash, right? So accrual basis means not all cash, not all cash, but cash basis means only cash. So we have to prepare net income cash basis from this income statement, okay, from this income statement and from the balance sheet. Now here you have to increase, you have to add a new column in the question paper. So question paper will not give you this column. Question paper will only give you last current year and previous year data. Okay, look at here. Question give you only last year and the current year data. So you have to create a new column. It is called increase or decrease. It is called increase or decrease. So you have to create this new column, increase or decrease. Increase or decrease. So how to write increase or decrease. We have a formula. We have a formula how to write increase or decrease. Formula is current year minus previous year. So we have 2 years data, current year and the previous year. So the formula is current year minus previous year. Okay. Current year minus previous year. If you find a plus sign, it means that it is increase. If you find a minus sign, it means that it is decrease. So we are going to apply this formula. We are going to apply this formula to this column. To this column, and we have to, although in the exam question, I will not ask you to do that, but you should do that because it will help you to solve the question very quickly and accurately. Okay, this is not mandatory. You no need to do this column. Even I will not see this column. Okay, but you can do it. You can do it to make the question more accurate answer. Now we can see that we have, this is the previous year cash and this is the current year cash. So what is the formula? Current year minus previous year, right? So it is $11,000. You can see this is $11,000 and it is increased, right? It is increased. So plus sign means it is increased. What about the accounts receivable? Previous it was $15,000. This year $10,000. So current year minus previous year, it is minus sign, right? Minus sign means you can use the first bracket. $5,000 decrease. So we can follow this. So here, if you don't use this minus sign here, if you learn your principles of accounting 1, this is less, right? So we don't need to use the minus sign here. We can avoid this first bracket from the question. We can put either way. Building less accumulated depreciation, equipment less accumulated depreciation. So if you do not use the less term here, you can make first bracket here, right? You learned this. Anyway, so $3,000 accumulated depreciation increase. Then 8,500 increase, 1,000 increase. Current liability increase 8,000. Income tax payable decrease 1,000. And some other increase. So we do this kind of increase and decrease from the question paper. And this is the answer of this question. So answer is given already in the question. You can see that this is our current year cash and this was the previous year cash. So our cash increase $11,000, right? Our cash increase $11,000 this year, but we don't know what is the amount, okay, what is the amount for operating, what is the amount for investing, and what is the amount for financing. We know that total increase, okay, total increase is $11,000, but we don't know which part is operating activities, which part is investing activities, and which part is financing activities. So look at the solution format. I told you that. This is our answer. Our answer said that cash increase $11,000, right? This is our answer. Cash increase $11,000. And how this increase? We know our cash at the end of the year and cash at the beginning of the year. So we have information this one. Cash, this is the beginning cash. This is the beginning cash. And this is the ending cash. And this is the ending cash. So current year cash minus previous year cash equal $11,000, right? $11,000. So this is the answer. And in the exam, you no need to ask your friend what is the answer of this question. Answer is here. Answer is given in the question, right? Answer is given in the question. Now, as this is the solution format, this $11,000, some part is here. Some part are operating activities, some part are the investing activities, and some part are the financing activities. So we have to allocate this $11,000. Okay, we have to allocate this $11,000, some part operating activities, some part investing activities, and some part financing activities. For example, if I write the answer, for example, here it is operating activities. For example, operating activities is $86,000. Then investing activities is minus 70,500, and financing activities is minus 4,500. Now what is the balance? Look at here. Operating activities $86,000, right? Plus investing activities, first bracket means minus, right? Then financing activities 4,500 minus, it is $11,000. Do you understand? So this number you have to calculate. This number you have to calculate. This number you have to calculate. And this numbers also you have to calculate. We don't know this number. We don't know this number. So we have to calculate. When we calculate, we do plus and minus. If it is also $11,000, it means that your answer is accurate. Okay, but I told you that when we calculate this number, okay, when we calculate this number, we cannot transfer operating activities to investing activities, investing to operating, financing to investing, investing to financing. We cannot transfer this. We should find out the exact information who belongs to operating, exact information who belongs to investing, and who are the financing. I already told you that this part are the investment and the PPE. Can you remember? I already told you that. Investing means it should be related to the investment and property, plant and equipment. What about the financing? It should be long-term liability and it should be equity. Right? Can you remember? If you write long-term liability here, okay, mistake. If you write property and plant equipment here, it is your mistake. Do you understand? So even though your answer may be $11,000, okay? Even though your answer is $11,000, so you ask your friend, what is the answer? Answer is $11,000. But your friend maybe get full marks and you may get 50% or 1/3. Why? Because you make mistake. You put some account here to here. So if you make this kind of mistake, you will not get full marks. Even if you are happy in the after the exam, you are very happy. Your answer is also $11,000, but maybe you have a lot of mistake already. So that's why we are learning who are the operating, who are the investing, and who are the financing. Now I told you that for the operating activities, this part, we have to follow indirect method. So to calculate this number, we have to follow which method? We have to follow indirect method, right? But investing don't have any method. We don't have any method. We don't have any method for investing activities. We don't have any method for financing activities. There is no method. There is no method. Only when we prepare operating activities, we have a method. Clear? Now today, actually, we are going to learn what is the indirect method actually. It is not very easy, not very difficult. So you have to know how to prepare cash flows from operating activities using which method? Using indirect method. Now this is the summary of the indirect method. Now we are going to learn indirect method. We are going to learn indirect method. So how to solve the indirect method? How to solve the indirect method? So indirect method said that we have to calculate net income based on cash basis. We have to calculate net income based on cash basis. Although question give us net income based on accrual basis, we have to convert it to the cash basis. So this is step 1. Step 1 means net income based on accrual basis, and this is given in the question. Question already give you this information. Look at here. This is your question. Question already give you net income based on accrual basis, right? Question already give you this information. And this is the last step. So step 1, start with net income accrual basis, and the last step we should calculate net income based on cash basis. Now, what is the relationship between net income net income and cash under cash basis? So relationship between relationship between net income and cash under cash basis of accounting. We should know the relationship that I explained last class already. So net income according to cash basis, net income increase should be equal cash increase. That means if net income increase, for example, if net income increase $10,000, at the same time, cash should also increase $10,000. This is a relationship. Net income increase means cash increase. Do you understand? And if net income decrease, cash should also decrease. Cash should also decrease. Do you understand? So look at another example here. How to solve it if we have a problem like we find that this one, for example, look at this. Net income increased $10,000, but cash is zero. Cash is zero. If you find a situation like this, what should you do? You find a situation that net income increased $10,000, okay? Net income increased $10,000, but cash do not increase. How can we make it? How can we make it similar? Net income increased $10,000, okay? But cash do not increase. Or we have another example here. So red color, net income decrease $10,000, but cash do not decrease. First, think about these two. How to solve this issue? We know this is the formula. If net income increase, cash should also increase, right? But we find a situation that net income increase, but actually cash do not increase. So how to make it equal? How to make it equal? So we cannot touch in the cash because cash is not increasing or decreasing, right? So if we minus $10,000 now here, what is the meaning? If we minus this amount from net income, if we minus this account from net income, then it is now equal. You understand? It is now equal. So I repeat again, for example, here. Net income increase 10,000, cash do not increase. How to make it equal? Okay, make it equal like this. Okay, look at this example. Net income decrease, okay? Net income decrease $10,000, but cash do not decrease. Cash do not decrease. Decrease means it is already minus, right? Decrease means I can put first bracket. First bracket means decrease. So net income $10,000 already decrease, okay? But cash do not decrease. How to make it equal? Plus, okay, very good. Plus $10,000. So if we do these kind of things, okay, then then it will help us. It will help us to make it equal. So this is something I can write here first, then I will show you the example. Step 2. Let me write first according to this here. So here we find that if cash do not decrease, okay, if cash do not decrease, we added back this money, right? You understand? If cash do not decrease, then we added back this money, right? We added back this money, something like this. Yes, so we are also going to do this kind of plus and minus here. So plus and means added back. Non-cash expense. Then I'm going to show you the next. I will give you example first. Step 3. So I put some plus and minus sign here. I put some plus and minus sign here to make it, that is my goal is to make it something like this. Net income equal cash. This is my goal, to make it this to equal. Net income and cash equal. We have expense, okay, we have expense, but this expense is non-cash expense. So if you record expense, try to understand, if you record any non-cash expense, expense will increase your net income or decrease your net income? Expense will increase or decrease your net income. Look at here. For example, this is our non-cash expense. For example, depreciation is non-cash expense. For example, depreciation is non-cash expense. Try to understand. Depreciation is non-cash expense, and we record not $99,000. We record $9,000. We record $9,000 depreciation expense. Okay. Now tell me, you record $9,000 expense. Your net income increase or decrease? Because of this $9,000, this net income is increasing or decreasing? Decrease, right? Because if you record expense, it will decrease your net income. So net income decrease, but cash decrease. Net income decrease, but cash do not decrease, right? Do you understand? You record expense here. You record 9,000 here as expense, and it is non-cash expense. And because of this expense, your net income decrease. But as it is non-cash, cash do not decrease. Okay, cash do not decrease. So what should we do? If you want to make it equal with cash, okay, if you want to make it equal with cash, you have to add back this money to the net income. So we added back this money. So you have to add it back. We have to add back this money with the net income. Why? Why we added back? Why we added back? To make it cash and net income equal. Cash in net income decrease, right? Net income decrease, but cash do not decrease. Do you understand? Net income decrease, but cash do not decrease. So we have to add back this money. We have to add back this money to make it equal. Now, from your principles of accounting 1, you must learn that who are the non-cash expense. although they are expenses but not related with cash. For example, we are using this equipment. We use this equipment and it is depreciated every year, right? If it is cash, then cash will drop from here. So depreciation expense, then amortization expense, then bad debt expense, this kind of expenses are called non-cash expense. So they are the non-cash expense. Try to understand, they are the non-cash expense. So if your question have any non-cash expense, this non-cash expense means that net income decreasing. Okay, expense means that net income decrease. But what is the relationship with cash? Cash do not increase. Cash do not decrease, something like this. So we are going to add it back this money. Before we decrease it, right? Because before we minus it, now we added back this. We added back. Clear? Look at, we have a loss here. We have a loss. And this loss also called non-cash loss. So why it is called non-cash loss? Try to understand why you have this loss. We have loss because we sell one equipment. Do you understand? Look at here. Equipment is property, plant, and equipment. You sell, disposal means sell. Okay, disposal means sell. You sell your equipment. You sell, when you sell your equipment, you receive cash, right? Do you understand? You sell equipment and you receive cash. But we know that this property, plant, and equipment, is investing activities. Look at it, up to here, this is investing activities. You sell equipment. And when you sell equipment, you receive cash, right? So where should we transfer this cash? Look at here. We should transfer this cash to the investing activities. This is investing. This is investing activities. We should record here. But when you sell it, you know that if you sell something, you may have gain, you may have loss, right? If you sell any asset, you may have gain, you may have loss. So you have a loss here. You have a loss here. And where you report the loss? You report the loss under income statement, right? You report the loss under income statement. So this loss is not related with operating. This loss is related with operating, right? But the cash we record already under investing. So this loss is a non-cash loss. You record loss $3,000. Where? You record loss $3,000 under income statement. So because of this loss, your net income decrease. But operating cash do not decrease. Think about the operating cash, right? Operating cash do not decrease. So this part is the operating cash. I make it more easy to you. Operating cash. So you record loss here. So your net income decrease, right? Your net income decrease, but cash do not have any chance. Why? Because this is not the loss related with cash is investing activities, not operating. So we are going to add it back the loss. $3,000. So these two accounts, you can see that these two accounts, non-cash expense and non-cash loss, we added back. Why we added back? Because cash do not decrease, right? Cash do not decrease, so we added back this money. Clear? Now, if we have a gain here, look at here. For example, we have not loss, we have a gain. For example, this question don't have this information, but I can write here. If we have a gain goes under revenue. Gain go to under revenue. Do you understand? If you have a gain, for example, gain is $3,000, for example. So what is the meaning of this gain? Why you have this gain? Because you sell equipment. You sell equipment and you have a gain, right? And when you sell equipment, you receive cash, and the cash already transfer where? Cash already transferred to the investing activities. Clear? But you record gain under operating activities. So because of this gain, your net income will increase or decrease? Because of this gain, your net income will increase or decrease? Increase, right? Because of this gain, your net income increase, but operating cash do not increase. You understand? Although your net income increase, but if you think only operating cash, it do not increase. Why? Because this gain is non-cash gain. This gain is non-cash gain. So this non-cash gain, okay, increase our net income, but do not increase our operating cash. So that's why we are going to deduct this money from net income. So if we have any non-cash gain, we have to deduct it from the net income. You understand? Because gain increase the net income, but cash do not increase. So we deduct this money. Loss decrease our net income, but cash do not decrease. So we may add it back. So this step 1, 2, 3, 4 is related with, first we start with, don't forget that we have to start with non-cash, accrual basis net income, and we should end with cash basis net income, right? We should end with cash basis net income. And in between, if you make change here, no problem. I mean, if you want to write, you no need to follow 2, 3, 4 accurately, okay? You can make it random. Anyway, so here, if you can remember the step title, no problem. Anyway. Now I told you that, so this part came from income statement. This part came from income statement. Now look at the balance sheet. Look at the balance sheet. We have some other accounts that are related with the balance sheet, but operating. Look, this is operating. Accounts receivable operating. Inventory operating. Prepaid expense operating, right? Why they are operating? Because they are indirectly related with revenue. Then accounts payable operating activities. Income tax payable operating activities. Why? Because they are related indirectly with expense. Now let me see first one, accounts receivable. What is the meaning of accounts receivable increase? So accounts receivable increase. What is the meaning? What is the meaning of accounts receivable? Accounts receivable means you will receive this money in future, right? Receivable means cash to be received in future. So in summary, this is your cash belongs to other people. Do you understand this meaning? Accounts receivable is actually your cash, but this is not with you at this moment. This is belongs to other people. These people will give you this cash in future. So accounts receivable increase means, look at the term, accounts receivable increase. It means that another meaning is that cash is not with you. Do you understand here? Accounts receivable is your money, and when accounts receivable increase, it means that it is your money, but it is not with you. That means cash is not with you. Cash is not with you. So look at the opposite. Accounts receivable decrease. What is the meaning of accounts receivable decrease? So if accounts receivable increase means cash is not with you, it means that cash is not with you, right? It means that cash is not with you. If cash is not with you, okay, if cash is not with you, that means your net income is increasing or decreasing? Net income, if you make it equal, right? If you want to make it equal, net income is also decreasing, right? Because cash and net income should equal sign. So accounts receivable increase means cash is not with you. It is your money, right? It is your money, but it is not with you. So cash is not with you, so minus sign of the cash. So minus sign of the cash means net income should be decreased. What is the meaning of accounts receivable decrease? What is the meaning of accounts receivable decrease? You receive cash. No, you do not pay cash. Someone paid you cash, right? That means cash is with you. Cash with you. That means cash is now plus. If cash is the plus, net income should also be plus. So I repeat again, accounts receivable increase means cash is not with you. Cash is not with you. So cash minus. So as cash minus, how to make it with net income? Net income should be also minus, right? Now accounts receivable decrease means cash is with you, right? Cash is with you. So cash plus. So net income should be plus. And we know that accounts receivable is, look at another example. I can write here these two example. Accounts receivable debit, for example, $50,000. Sales revenue credit $50,000. So look at these two. Here accounts receivable increase. Accounts receivable increase. So accounts receivable increase means you sell your product, right? When you record, look at here. When you sell according to the accrual basis, net income increase, right? According to accrual basis, you record sales revenue, so net income increase. But you did not receive cash, right? You did not receive cash. That means accounts receivable increase here. Accounts receivable increase means cash is not with you. Cash is not with you. Cash is not with you. Accounts receivable increase means cash is not with you. Do you understand? But here we already increased the net income. Try to understand. We already increased the net income. So this is not equal. These two are not equal, right? Do you understand? These two are not equal. So we increase our net income. But cash do not increase, right? Cash do not increase. Why cash do not increase? Because this is my money, but not with me. So how to make it equal? Look at here. How to make it equal? Now, if we decrease the net income, it is equal, right? It is equal. So here we have to write step 5, for example. Increase current asset. Current asset increase means Current asset increase means cash is not with me, right? Cash is not with me, so minus. So look at opposite example. Look at the example of current accounts receivable decrease. Look at the example of accounts receivable decrease. Cash debit. Cash debit $50,000 and accounts receivable credit $50,000. So now accounts receivable credit, it means that cash accounts receivable increase or decrease? Accounts receivable credit. What is the meaning? Meaning is accounts receivable decrease, right? Accounts receivable increase debit, accounts receivable decrease credit. So this is decrease. Accounts receivable decrease. So what is the meaning of accounts receivable decrease? What is the meaning of accounts receivable decrease? It means that cash is with you, right? It means that cash is with you. It means that cash plus. So how to make it cash and net income equal? If you know that cash is already with you, right? So net income should increase or decrease. So to make it equal, net income should be also plus, right? Net income should be also plus. So accounts receivable decrease means cash is with you, right? So net income should increase. So look at step 6. Decrease current asset. So decrease current asset means cash is with you, right? So look at another example that will help you to learn clearly. For example, inventory. We know that inventory is our current asset. Inventory is our current asset. So purchase inventory, for example. Purchase inventory. Purchase inventory means your inventory increase or decrease? Increase. Increase. So what is the journal? For example, journal is inventory debit and cash credit. Now here current asset increase, right? Look at here. Current asset increase. So current asset increase means the cash is not with you. Do you understand? This is a journal. Look at it. For example, $20,000. Inventory increase. So here inventory increase. So inventory is current asset. Inventory increase means the cash is not with you. So here cash is minus. If cash is minus, what should be the net income? How to make it equal? We find that our current asset increase, right? We find our current asset increase and we pay cash. Now cash minus. So how to make it with the net income? It should be also minus. It should be also minus, right? So that means that current asset increase means current asset increase means cash is not with you. Cash decrease. So net income should be also decrease. So look at the proof here. Look at the proof. Current asset increase means, right? Current asset increase means cash is not with you. You paid cash, right? And current asset decrease means, okay, current asset decrease means, for example, here you buy inventory. Here you buy inventory. Now sell inventory. Sell inventory means your inventory increase or decrease? You sell your inventory. Inventory increase or decrease? Inventory decrease. Now, what is the journal? Journal is your inventory decrease means credit. Your inventory decrease means, look at here, decrease. Decrease means it is credit, right? For example, $20,000. Inventory decrease because you sell it. So what is the debit? What is the debit here? Cash debit. Do you understand? We sell our inventory. The journal is inventory credit, inventory decrease, and we receive cash. Cash receipt means here cash is plus. Cash is plus. So the relationship, how to make it the equal relationship? If cash is plus, net income should also plus, right? Net income should also plus. Net income should also plus. So current asset decrease means, look at here, current asset decrease means cash is with you. As cash is with you, net income should plus. So look at here. Current asset. Current asset decrease means, I receive cash, right? Now look at another example. Current liability. First example, income tax payable. Income tax payable, I write the journal first. And you should tell me income liability increase or decrease. Income tax expense debit. And income tax payable credit. What is the meaning? What is the meaning here? Income tax expense debit, income tax payable credit. The meaning is income tax, this money you have to pay to the government, right? You have to pay to the government. What is the meaning of this term, payable? Payable means although this is government money, right? This is government money, you not yet paid. Do you understand? So this is government money. Holding by you. Do you understand? Payable means not yet paid, right? Payable means cash not yet paid. Do you understand? Cash not yet paid. So this is government money, but holding by you. That means as this is money holding by you, your cash is at this moment plus. You have some cash with you, right? You have some cash with you. Income tax payable increase means, income tax payable increase means, okay, you are holding other people money with you, right? You are holding other people money with you. So how to make it equal with net income? How to make it equal with net income? So some cash, although this is other people cash, try to understand. This $10,000 is other people cash, but holding by whom? Holding by you. That means this is with you at this moment. So as this money is with you, so we make it plus. So how to make it equal net income? Because cash and net income should be equal. Also plus, right? Also plus. Also plus. So this is the summary here. This is the summary here. So this example says that current liability increase. Current liability increase. Look at the example of current liability decrease. So here you can see that step 7, increase current liability. Increase current liability means, okay, other people money you are holding, right? Increase current liability means other people money you are holding. So you make it plus. Now look at the example of current liability decrease. Current liability decrease. We know that liability increased credit, liability decreased debit. Look at the journal now. Income tax payable, debit, and cash credit. So this example says that liability decrease. We know that liability decrease debit, right? And here liability increase credit. Liability increase credit, and liability decrease debit. So your liability decrease. You already pay money to the government, so your liability decrease. Do you understand? This is the journal. Income tax payable debit, for example, $10,000, and your cash credit, $10,000. So what is the meaning? Meaning is you pay cash to the government, so your liability decrease, right? Your liability decrease. So cash is here minus. So we find that cash is minus. Cash is minus. So if we want to make it net income equal, net income should also minus. So here cash minus because liability decrease. Our liability decrease means we already pay cash. So cash decrease means net income should be decreased. So this is a step 8. Decrease current liability. Decrease current liabilities. So decrease current liability means we already pay cash. So as we pay cash, our liability decrease. And as cash decrease, net income should be decreased. So look, everything we are going to add it and deduct. Look at here. First step, start with accrual basis net income. Last step is called cash basis net income. And if it is $86,000, for example, $86,000. For example, this is $86,000. And I delete this anyway. So we start with $145,000 accrual basis net income, but we find that actually cash basis net income is $86,000. And in middle, we do this kind of plus and minus. So these two kind of plus and minus should be related with this. We should prove this. Operating cash equal net income. Okay, operating cash equal net income, this should be equal. So to make it equal, we do this kind of plus and minus. And finally, we find that this is accrual basis net income, but this is the cash basis net income. So try to read the PowerPoint again and again. We'll solve the question 1 in the next class. That's all for today.